Hey traders, how you going? Okay, so as promised in a great number of previous videos, this one's going to be about the Babon slope strategy. And what that actually is essentially is trading in the pullback during a trend run, right? Now, usually when we're doing something along those lines, where we enter into that reversal trade is usually guesswork. For example, say for instance we've done our analysis around what the present market is doing and we say, okay, this is a double top and or an M formation, the market's pushed down. Now what we're looking for after that is where the market does push back up again to a point just shy of this or this, and in this case it's here, and we can possibly even use our fibs to verify. So that would be the 100% line. We draw it all the way down to the bottom of this and see how it's between 61.8 and 78.6. So anytime it penetrates past that, especially on a downtrend, so we're expecting that this is going to be a justified trend down, right? So let's say you've done that analysis. Now what we're looking to do is look for pullbacks that happen, right? Now, when you're looking at it essentially right now, there really isn't a good spot. You could possibly use the EMA6 line alone and say when the market opens and pushes up to the EMA6 line is when you execute your entry. And that's not always going to work. So how do we make it more secure? How do we apply more science to this to ensure that every single time you're trading something like this, that there is a point that is going to minimize any possible losses that happen? And in comes the Babon slope strategy. Now, I've got it up for you guys. It's simply an ex4 file that you need to download and add to your MT4. So for those of you unaware, connect with shiva.com, go to the downloads page, scroll down until you see this slope direction line ex4 file. Click on the download file button. It will download to your computer, save it onto your desktop, and then for those of you that don't know how to add it onto your MT4, this video here, see this link here, if you click on it, let me just click on it now, it's going to take you to YouTube and you'll have that stuff there.
Okay,
Okay,
in this video,
sorry about that. So watch the video. It's 18 minutes, but it's going to run through how to add files onto MT4 for Windows and MT4 for Mac separately, okay? Alright, so we go back onto our MT4. Once you've downloaded it, go into and relaunched MT4, go to View, Navigator, scroll down, and you should see where it says Slope Direction Line. So I'm going to double click on that. It's going to open most likely on the Common tab, but I want you to click on the Colors tab. Right now, this is set to red and white. I'm going to change mine because I've got the ribbon down here during the New York session being red. So I'm going to click on this and change this to green's darker. I'll change it to green. And I'm also going to thicken the lines. So we're going to use the second option here. It's just going to help because my EMA6 line is thick, which is something you guys have as well. It'll allow us to look at it better. So click OK, and this green and white line will appear. And basically it's just, you can use it as an indicator which changes color depending on if the market's going up or down, right? So when I said this is a trend, you could possibly see this as a possible trend as well, something along these lines. And how you trade it, it's very simple. How you trade it is, let me have for example, this bit here. All it is if the market is trending down and this line is green, then what you want to do is you wait for the candle to open, right, and price to go up above both the Babon slope line or the slope directional line and the EMA6. So, and don't worry about it, I'll put these instructions in the info section below this video. So it's to do a put trade, you're wanting it to open, go up, and at some point when it's above the yellow line and the slope line, you execute a put going south, right? The reverse of that is when the market is pushing up at some point, when you know this is, and again, you've got to be very careful here, you've got to know this is a trend happening. So for example, something along these lines here Notice how this candle comes down and it comes all the way down below the white slope line and the yellow line, and we probably would have lost that trade, right? So what I do is, when I know there's specific trend runs happening, when you can kind of pick up on it, that's when you trade this. So say, for example, here, as I've said earlier, you know this is going to push back down again because of the whole market cycle movement. Then what we're doing here is that market pushes down, this opens, goes all the way up here. Now, in real time, this might be a little bit difficult because in real time, it's not always going to be where the candle is going to come and hit both lines. So in here, it goes past the EMA6 line, which you possibly would have been able to see because of the movement of this candle. But this green line might have been up here somewhere. So you got to kind of mentally judge that, yes, it's going to penetrate somewhere here, up here, and that will help you execute a better reversal trade. Now, you can apply this to pretty much whatever strategy you're doing right now as well. And sometimes I do it as well, where the market is moving in a particular direction and it's doing it quite rapidly. And I know, for example, well, let me explain it this way. When the market's moving up, I'm expecting that there's going to be at least a minimum of two reversals that the market will do. And that's exactly when I don't trade this. For example, here, market pushes down. I see this little doji and this candle pushing up. This is not where I'm going to be looking for a possible reversal, right? The reason for this is that, notice how this is a push down, the market goes up, push down, market goes up, right? It's not always going to be perfect where the market moves in three pushes, but expect that it will. For example, here, this is a very common thing. When the market is trending up, this is not an uptrend, but when the market is trending up, you'll get this push down, market goes up, and then the market's going to stall. Okay, usually happens on the third candle. Sometimes it will happen on the second one, and that's when, you know, when you're doing the fourth wave, some of you would have taken a trade here and you would have lost. This is not, you would have looked at this and you would have said, okay, in my last video I talked about the morning star pattern. This is pretty much near the, or it is the low of the present day and new to Frankfurt's session. Many of you might have wanted to trade this candle on the open. Keep in mind what I said earlier, the analysis has to be done whereby this is a downtrend. Even though this pushed up, this is still a downtrend. Okay, this candle pushed down, this is still a downtrend. Officially, we're expecting that the market's going to keep going down today and tomorrow. So on a downtrend, you're only looking for puts. On an uptrend, you're only looking for calls. The Babon slope strategy is going to help you do that. So when the market's moving down and you know it's moving down, remember, candle opens, pushes above, price pushes above both the yellow line and the green line, and that's when you execute a put going south. And what we're hoping is that there is a gravitational pull, not literally, but you know, there's a lot of money that will push the market down. And when the market is moving, when price does come up here somewhere, there is enough money behind it to push it back down again. So you are bound to get a wick. The reason why we don't just take a trade on a very slight pullback is because we don't know if the candle is going to be like one of these ones here, or this one here, where the market is going to end up being the candle is going to end up being a green one, but there's just not enough force to push it all the way up or push it all the way down again. So what we're doing is we're saying these two lines are going to help us to maximize that wick space wherever we get into, in order for us to nail it. If you see these little dojis that slow the market down, for example, here, when this pulled back, I would not have looked for an entry on this candle, simply because, you know, this sort of stuff, remember that? There's every chance that another candle may push up. In this case, look, every chance this other candle pushed up. So whatever is probable, we try and ignore that. Because look, in binary options, whatever is going to make us trade something that's more familiar and more likely, we do that. Any information that helps us to also filter out possible losses, we do that as well, because that's the only way to minimize the losses, right? Going back to this waves thing, remember this? It's where once initial push happens, there's going to be a push down. You could utilize a strategy here, or an amendment to this strategy here, is that this Babon slope push back down. If the market, say for instance, market's pushing down and this is a green candle, maybe just do it on that first candle. Notice here, if you see the doji, the next one's going to blow right through it. This one, if this price would have come down low enough to hit not only the Babon slope but also the EMA 6 line, this possibly would have won, right? These ones here, we ignore entirely, okay? If candle opens somewhere in the middle, what you want to do is, and this will still be valid trade, is say for instance this one here, open in the middle. The valid trade here would be where the market pushes down and hits or goes below the EMA 6 line. That's when you execute your trade. Remember, it's going to be a little bit tricky when you're doing this in real time, because you're going to have to prejudge where the yellow line may be. It's not so difficult. With a little bit of practice you're going to nail it, but this whole addition to whatever strategy you're doing right now is really going to help you minimize those losses, right? So let me see if I can show you a few more examples. Again, do this on a trend run, much better. This one here, look at that. Market opens, pushes down, and this, you will see this because both the EMA 6 and the Babon slope line is very close together, so it doesn't take much for you to fall below it, and then you take your entry there. What this actually essentially does is, just in case the market pushes down and closes off in like a red doji, well, you're trying to minimize that possible loss. So if you're in the wick space, there's a greater chance that you win. And again, remember when I talk about pullbacks, someone did ask me a really good question about it. Pullbacks literally is this area here, wherever the wick is. There's always going to be instances where people jump into trades at the very start, where that may end up losing, just by a very few slight micro pips. Here's a way to minimize that. We're trying to win as many of the trades as we possibly can. Please practice with this. It's not something that I want you to just do blindly. The more you practice, the better you'll become. Again, look at, that's not a good example there. Let's see if I can find more. Okay, when the market's going sideways, you could potentially use that. I would ignore it because you don't know how far the market's going to reach up. But again, I like these within trends, okay, or trend runs. Here's one case where you've got the trend runs happening. This possibly is the only one where the trade would qualify. This market pushes up. If you've got these tiny bodies prior to it, you want to do a couple of things. You want to either use fibs, or you would wait for price to push past the body of this. Now, let's see if we can apply some fib to this. This is the market's going down. That would be the official high. And I would use possibly one of these lines down here towards the left as an official low. Okay, actually the first candle. Okay, we'll use that as the official low. So what you do here is, okay, this is perfect. What you do here is that candle opens, and if there is a fib line, that's kind of like a resistance line for us. Market pushes up, it goes above the green line, and then at some point it is penetrating, or it's touching the yellow EMA 6 line. The other thing that we can then do is to say, okay, that is also a point which is above the body of that previous candle. That's when you can execute a reversal, do a put for the remaining duration of this candle. Okay, let me see if I can find one here. Look at all of these ones here. Market trending up, pushes up. Here's a bit of a pullback. Notice how here this price comes down below the EMA 6 line and does touch the Babon slope line. Again, in real time, this is possibly going to be a little bit difficult to catch, but you can actually take that trade. right? Just expect there is going to be a pullback, or one or two of them during a trend run. Market pushes back up again. This one doesn't qualify. This one doesn't qualify. This one may qualify because it is touching the EMA6 line. This one here, fantastic. Market opens in between, comes down, and now you could do a couple of things here. You could say, one, prices come down below this green candle. It has also come down below the EMA6 line, and it's already below the Babon slope line. So you're free to take your trade anywhere below that line that I've just drawn in. And that would be a call for the remaining duration of this 15 minutes, right? Here again, New York session opens, and we have both the Babon slope and the MA6 line very close together, and in both instances here it pushes down and touches somewhere close to the bottom of the body of this, and you could take it pretty much anywhere here, and the same with anywhere here. This one here comes down. That's still a good trade. You take that. Let's see if we can just look at something in real time right now. Okay, here there's no way of knowing for us that this is going to continue going up. So what we do is it's a hard and fast rule here. This is going to minimize the number of trades you could possibly do. But what we do is we make sure that we're only looking for calls when this line is white, okay, and trending up. And we only look for puts when this line is green and the market's trending down. Okay, so I will write some of this up and I'll put it in the info section. But in short, what we're just doing is we're giving you a spot to look for where you can execute a reversal trade. I hope that helps. If it doesn't, please do comment below the video, and I'll create another video that clarifies this a lot more. Okay. Yeah, that's it. All right, guys. All the best.